Good morning. Hey, what's up? This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Only a block or two down from this lovely site that you're looking at right here. There's the Lauderdale by the Sea Pier, and I'm only 2 blocks down from there. So when you come to visit me to buy your gold, silver, and platinum, let's talk about Platinum Day a little bit too. Make sure you come by and visit the pier here. Have yourself a drink, coffee, whatever, and enjoy the walk. Hey, silver hits $35, and I'm not punking you here. I'm going to explain why and how silver hit $35 this last week per ounce, and this is absolutely good information to know, and I think you're going to be very interested in hearing this. Meanwhile, while everyone was sleeping with gold and silver, platinum yesterday, I noticed it at the end of the day. I didn't really follow it. I didn't get asked for platinum. We don't get asked for a lot of it, but man, it jumped up like $100 an ounce. Absolutely incredible jump right out of nowhere. But as you know, for the last 7 months, 8 months, I've been telling you, platinum is super cheap, man. I was telling people to buy it when it was $800 an ounce, high 700s, 800, 900, even at $1,000. I think it's super cheap. I still think it's cheap at this $1,200 level. Not quite as cheap as it was last week, or actually the day before yesterday. But she's up $100. I was kind of expecting this. The article on Zero Hedge, by the way, Zero Hedge is my new favorite kind of news hub. I won't call them a news site per se because they have all different opinions, all different writers, all different publications, you can say, writing for them. You can read a Wall Street Journal article in here, part of a Bloomberg article, or somebody that's completely digresses and has a different opinion. One of the things I love about Zero Hedge is that they don't force feed you a narrative. They give you a lot of different narratives and let you figure it out for yourself. And that's what I really like about it, and that's why I canceled my subscription to the Wall Street Journal after 15 years, and I refuse to read other corporate media news because they are nothing more than feeding you a narrative. Let's take a look at this little platinum article here. The epidemic of catalytic converter theft which I've heard about a few times this last year. I guess it has something to do with joblessness and people having nothing to do during the day but go out and steal catalytic converters. The U.S. Mint is unable to meet platinum coin investment demand, which means that U.S. Platinum Eagles will probably have a much lower mintage than they've had in a long time this upcoming year. And I'm not quite sure what the mintages are last year, but it can't be too good. So probably a slight rarity as well. But anyways, demand hopes from a post-pandemic vaccine-supported industrial rebound has sent platinum prices soaring in recent weeks. I think South Africa has gotten hit quite hard. In fact, yesterday I told you I was going to investigate what happened with these shortages and such. And that's what we're going to talk about here in a little bit. But South Africa, you know, the Krugerrand shortage that we're experiencing right now has a lot to do with the mines being closed down over there, as well as their mint. So this COVID virus has really put a big, besides the fact that we have a soaring demand for precious metals, we've got that black swan that for the last year, most mints and most mines have been closed. There's just no supply to even dig up out of the ground, much less to come from scrap sources or come from investors that are reselling. And we all know that COMEX in London doesn't have the metal, and we'll talk about that some more here. But anyways, it looks like platinum really $100 up basically yesterday, more or less it seems like. And platinum is heavily used in catalytic converters to reduce emissions from cars and trucks. Bloomberg notes that palladium has been trading at a big discount to sister metal palladium, or platinum, and that should say platinum has been trading at a big discount to its sister metal palladium, which is in that $2,200 range. We don't even talk about palladium anymore because nobody buys it as an investment metal that I'm aware of, which is also used primarily in catalytic converters. I would be surprised to see that they didn't start switching from palladium back to platinum. Originally, they used to use platinum in catalytic converters, but platinum got so expensive they switched over to palladium. It looks like they may do the opposite now. Notably, platinum's shortfall of supply over demand came even as auto catalyst consumption plunged by 22%, which is odd, but maybe it's not odd when you consider that the mines in South Africa, which produce a lot of platinum, have been closed. I would imagine the same thing in mines in Canada and Russia. Those are the three largest producers of platinum that I'm aware of. So those mines have been closed. So platinum has probably got a lot more room to go. It's probably going to catch up with gold here pretty soon, like silver is right now, even though it's not so much reflected in the paper prices. Anyways, interesting article, and again, I was really surprised when I looked at the screen yesterday, and all out of the blue, platinum's up over 1,200. I thought it was 1,244 or something like that. Pretty amazing, but we've been saying it for a long time. We've all knew that platinum is really cheap and probably still really is cheap. Let's take a look over just the front page of the Zero Hedge here. And again, I'm not, they don't give me any money for saying this. I don't get a free subscription or anything. And actually, I do pay $1 a day for a subscription, which is well worth it because I don't like seeing all the ads pop up all the time. But Zero Hedge, the beauty of Zero Hedge is you can read their stuff for free if you don't mind looking at all the ads that are very annoying. So, again, I'm not paid to say this. I just happen to like their news hub, and that's what I like to call it, a news hub. They give you all different kinds of narratives and all different kinds of opinions instead of just one. Microwave markets. Here, this is interesting. This plays into precious metals, and we've been talking about unemployment figures. The worse the country gets, the bigger the stimulus, and probably the higher precious metals is going to go, and the worse the dollar is going to get. So this is not good news for our country in general. God, it's hard to feel good about. You know that this is going to cause the price of gold and silver to go up, but man, it's just hard to feel good about people not working and about a bad economy. But that's why we own gold, silver, and platinum. Platinum now. You notice I said platinum. Anyways, jobless benefits surged back above 20 million. That's pretty sad, man. And it's going to get worse under this administration. We know it for sure. And impeachment nonsense. Futures grind higher after Powell vows to keep the punch bowl spike for years. There you go. There's another headline that's good for precious metals, gold, and silver. They're going to just keep pumping that money out, which means that gold, silver, and platinum are going to continue to climb. I don't even think we are in the beginning stages, even though I think this bull market in gold, silver, and platinum started in 2016. I don't even think we've seen the beginning stages of the seriousness of where this is going. That's just my opinion right now. I think it's going to surprise even me. The dystopian bubble, George Orwell meets Charles Mackey. I'm not quite sure what that's about, but coincidentally enough, it's funny, I have a little meme to show you on that. Going to just quickly go down here. Again, I recommend you look at ZH. You can do it for free. You got to look at the ads unless you want to pay $1 a day. But I like the fact that you get all different kinds of opinions. It's not just a single narrative by corporate media, which often just parrots the government's narratives. Let's take a look at an article I did find. Oh, no, that's not the article. I talked about the article I find. This is the crux of my conversation right here, and why silver hit $35 an ounce. And you're going to say, well, what does a fake gold bar have to do with... I should have found a fake silver bar. What does a fake gold bar have to do with silver hitting 35 bucks an ounce? Well, I'll tell you what it has to do. And again, I should have put a silver bar up here instead. What I'm saying here is that the price of gold and silver and platinum currently, I don't know about platinum, let me not even go there. The price of gold and silver, we are certainly fake. They're rigged. It's a paper market. Silver should not be at what the current price is, 27 and change. Let me just quickly take a look here. I think it's right there. We'll talk about spot prices. It shouldn't be 27 bucks an ounce. I am going to officially price silver at, let's see here, what's the current selling price of that? I'm going to price silver at 30 bucks an ounce right now. That's what the real price is. Follow Brian's physical spot prices. Don't follow the paper prices that we're fed and that we've had to rely on for the last 5 decades or more. These prices right here are bullshit. They really are. And I'm going to tell you how I come to that conclusion and why I think that the spot price of silver hit 35 bucks a week. And here's why. First off, if you're buying gold and silver, what are you buying? What are you supposed to be buying? When someone says, go buy me some gold and silver, and you come back with what? You come back with gold and silver. You come back with a real gold bar in your hand or a real silver bar. You don't come back with a piece of paper in your hand that says, here's your gold and silver. But more or less, that's what the whole world does, is they buy a piece of paper, an ETF or a contract, or some kind of strange investment vehicle of a gold derivative of some sort or silver, and they call that gold and silver. It is not, folks. It is not. It is not real gold and silver. That is fake. ETFs are fake gold and silver. COMEX contracts are more or less now fake gold and silver because they don't have the metal to deliver. And if they did, or if they got forced to, they'd probably go bankrupt. So COMEX is fake. We know the London market, the London bullion banks are full of shit. So basically, you've got these paper markets, these fake gold and fake silver items. are what is causing the markets to go up and down. Not the real stuff. So let's kind of stop there and think about that for a second. What I just said is that your ETFs, if you own a ETF, GLD, SLV, you own a COMEX contract, it's fake. It's not real. It's a piece of paper. It is really backed by nothing. In fact, there's just like U.S. money, currency, there's probably endless pieces of that paper, and that's why this market gets so monkey hammered around, and that's why you're not seeing the prices go up dramatically right now, because there's endless amount of paper out there. It's never going to be rare, except the real stuff, the real gold, not what we're looking at here, this fake gold bar, which represents an ETF or a COMEX contract or some other paper contract. The real stuff is quite rare and really hard to find. And much harder than what the paper prices are reflecting right now. So I saw common, and this is why I'm going to call silver officially hit $35 an ounce last week, because I saw, my figuring is that 90% in the typical average market and 1 ounce generic silver bars have been between, for the last decade or more, a couple decades, they've been between $1.50 and $2 over per ounce of silver. Well, last week, if you wanted to buy any 1 ounce silver bars or rounds, it was going to cost you as high as $37 an ounce, I believe. And that's $5, basically $5 more than the current price or what the current premiums are. So these things were trading, well, hold on, even more than that. What am I saying? Silver was around $27. They were trading at a much higher premium than that. They were trading at $37 an ounce. I'm sorry, not $5 an ounce. They were trading at $7.35, trading as much as $8 over spot when silver was at 27. The paper silver price was $27. Physical 1 ounce round bars, maybe 10 ounces if you could find them, silver bars, and generic 100 ounce bars were basically running $37 an ounce. Historically, again, let's just use a round number like $2 an ounce. The cost has typically been $2 an ounce. So if I just figured that my cost should have been typical and they were selling for 37, that would put my cost around 35, would put the spot price around $35 an ounce. So I figure that the real spot prices based on real physical selling did hit $35 a week, an ounce last week. You can't really use Silver Eagles as a guideline because they're just insane in their price. But Silver Eagles were selling, I think, as high as $42 an ounce last week, and earlier this week, as high as $42 an ounce, man. And silver was what, 27? So what is that? That's 12, 13, 14, $15, as high as a $15 an ounce premium. When Silver Eagles have typically in the past have always traded for, maximum $4.50 over. And I guess if you were to do an average for the last couple decades, maybe $3 or $3.50 over spot. So at a 14, that's a $10 premium, and that would put silver around $36, $37 an ounce over the paper price. So real silver is definitely hit $35 an ounce last week, and I believe that the premiums on this stuff are still up. It's still $3 and $4 premiums on this stuff. That I suspect that silver is really officially trading at 26, probably $28.50, $29. That's what the real price should be, or maybe even higher. So anyway, that's my opinion. That's where I got this $35 an ounce at, and I'm sticking with it. So, anyways, boy, I say that too much. A couple people pointed that out. I will try to get I will try to get anyways out of my vocabulary. So, anyways. Of course the game is rigged. Don't let that stop you. And again, I've been talking about markets being rigged, the paper markets. Your ETF is not real. Your COMEX, if you have an ETF, that paper is not real. It doesn't represent real gold. It's just a piece of paper, just like a U.S. dollar bill. They can just print endless amounts. It's not backed by anything. And you can say that COMEX is the same way because COMEX does not keep the metal on hand. And their excuse is always they don't have to. But the fact is, it's not a real market if you don't back that paper with gold. And your ETFs and all this stuff are not backed by gold. I don't believe it. Nobody believes it. And it's pretty much proof when you look at the physical prices. But again, combine that with mines being closed and all that stuff, man, I think we're in for some pretty hefty prices here coming up soon. So after all this, a lot of people say, well, why do I want to play a game that's rigged? And one of my favorite sayings, you hear me say it 100 times, of course the game is rigged. Don't let that stop you. If you don't play, you can't win. Markets are rigged. Elections are rigged. All these things are rigged. But if you don't play, you're never going to win. In fact, you'll be a loser. So the key to it is know how these things are rigged and act accordingly, and you can win. Anyway, I did it again. All right. Now I'm thinking about it all the time. So let's burn down their house of lies with these paper markets and comics markets, and buy physical. Get rid of your ETFs, get rid of your contracts, get rid of your paper gold, your paper silver, and replace it with real metal. I don't think you're going to ever regret doing that. It may cost you a little bit to do it right now, but I think it's definitely worth it. I wouldn't want to be sitting there holding all this bullshit paper if the shit hits the fan eventually. And in a time of deceit, telling the truth is a revolutionary act. And in my opinion, I'm telling the truth here that there's nothing behind these ETFs. The paper price is just full of shit, and that you really should own physical metals. Oh, boy. Well, I'm past that. Let's talk about... oh, hey, I did say I wanted to finish up talking about the shortages that we were looking at in precious metals. And the reason we're seeing these shortages is because of mines being closed, mints being closed, and the fact that all the... again, I talked to one of the major dealers that I talk to all the time, super nice guy, one of the smartest guys in the industry, I think, as far as precious metals goes. He's dealt in millions, I venture to say billions of dollars in precious metals. And basically what I just said in the last 15, 20 minutes is more or less, he told me in a lot smarter way, but more or less is what he's been saying. And I won't give his name, but here's a guy that is a professional metals trader, and he's basically saying the same thing. The game is rigged for sure. Paper prices are full of shit. There's no correlation between the paper price and the physical price. The physical price, what silver is bringing, for example, if regular generic silver is bringing $37 an ounce, and it's typically always been a $2 premium, that means that the real spot price is probably $35 an ounce. And I don't think he would disagree with me on this as well. And really, it's just craziness out there. The market is much higher than what we are seeing here. And I'm going to refresh our spot prices here. But what do? We have to look at something. But you know what we do is we just figure what the premiums are bringing, and we figure that's the real, minus the average cost of what they used to run us, a couple bucks over spot. We'll figure that's what the real spot price is. But meanwhile, let me refresh this real quick here. 1840. No, why is silver $27 an ounce when you can't buy any silver out there for less than $30-something an ounce? Why is that? What's going on with that? It just doesn't make any sense. It doesn't. And you know why it doesn't make sense? Because of what we've been talking about. The ETFs and these paper prices and the prices you see on the television, on your phone, on your computer screen, they're bullshit. They're not real prices. So we're going to have to figure out a different price discovery and way to figure this out. And I think if I use the premium thing that I just told you, that we can figure out what the real spot prices are. So I'm calling real spot prices at $30.12 today on silver. And gold, I'm calling real spot prices over $1,900 for sure. But let's look at the range of what the bullshit spot prices are showing us. So 1835.85 to 1847. Silver 26.74. Really, folks? Really? 26.74 when you can't find it anywhere and it costs you a fortune? Oh gosh, I'm going off on a rant again. And as high as 27.30. These are obnoxiously untruthful, these prices. But look at platinum. Look at platinum. 1237.51, down $5 today, but it was up to 1244 yesterday. So platinum's having quite a nice run. So anybody that bought platinum in the last several months has got to be quite happy. Well, I don't see these numbers moving too drastically, but I am curious to see what the spot prices or what the physical prices and what it actually costs to buy a gold and silver bar does. I'm curious of what the premiums are going to tell us next week. And I'm going to start using my own spot price. I'm going to call it the because spot price, physical spot price. I'm going to call it the because physical spot price. And I'm going to use the premiums and to figure out what I think the real spot prices are. And as I said, I think the real spot price of gold, I got to do more thinking on this, but I'm suspecting it's over 1900. And the real spot price of silver is definitely over 30 bucks right now. And platinum, I just think, who knows? But I do like its up move. Well, that's really it. This is Brian Kuzmar with Commercial Rare Coins. The only thing I suggest to you is with these nonsense low prices you see here, every time you see a dip, and you can buy a dip because the dips are still going to affect the premiums. You know, even if the premium on a Silver Eagle is $8, if silver dips, they got to base it on something, so that'll dip a buck. So whenever you see the dips on these nonsense paper prices, buy the friggin' dips. And as I said, avoid paper, silver, and gold like the plague. Tell your friends, go on the internet, tell everyone to get rid of their paper, silver, and gold ETFs, get rid of their comics. This is my opinion, of course, and buy physical only, even if it costs them a little more. Let them rot with their paper. We'll sit with the real stuff. Well, that's it. This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Call me anytime at 954-493-8811 between the hours of 10 a.m. and 4 p.m. Mondays through Fridays. Happy to help you out with any questions you have or what the best deal of the day is. And by the way, we still have silver and gold on hand. We're one of the few dealers that do. A lot of the big online guys are sold out. And as I said, when you get the opportunity, if you don't live in my area, always buy local as well. Try to avoid buying online, not because they're bad people, but because keep the money local. But we ourselves do have metal on hand. So if you're looking for gold and silver, we got some temporarily. Meanwhile, crazy times. Let's see what happens. And hey, as I always say, thanks for watching and hit the subscribe button. Have a great day. Talk to you soon.